Imagine a company so massive, so intertwined with its country's economy, that if it collapses, millions could lose their homes, billions could evaporate from the financial system, and global markets could tremble. Now imagine that this company owes over $300 billion, more than the GDP of some countries, and is racing toward default. This isn't a dystopian movie plot. It's real life. This is the story of Evergrande, China's property giant, and the financial time bomb that has the world holding its breath. Tonight, we're taking you inside the crisis that threatens not just a company, but an entire nation, and possibly the global economy. The rise of a giant, Evergrande, began as a real estate company in 1996. Founded by Hui Kaiyan, what started as a small venture in southern China grew into an empire almost overnight. Fueled by China's booming property market, Evergrande transformed cities, built skyscrapers, and became a household name. It wasn't just a company. It was a symbol of prosperity, ambition, and the promise of upward mobility in modern China. The company's growth was staggering. Residential complexes, shopping malls, offices, and even theme parks. Evergrande touched every aspect of urban life. Millions of Chinese families bought apartments from Evergrande, trusting the company to deliver their dream homes. The company's brand became synonymous with reliability, ambition, and luxury, creating a sense that it was untouchable, a pillar of China's economic future. But behind the shining towers and flashy developments, cracks were forming. Cracks that would eventually turn into a crisis of unprecedented scale. Borrowing to the moon, Evergrande's rapid expansion wasn't powered solely by sales. The company relied heavily on borrowing. Massive amounts of debt, short-term loans, bonds, and off-balance sheet obligations fueled its ambitious projects. The strategy was simple: borrow now, build faster, sell quickly, and use the sales revenue to pay off the loan. On paper, it worked, until it didn't. Debt piled up faster than revenues could cover it. By the late 2010s, Evergrande owed more than $300 billion. That's billions with a B, making it one of the most indebted companies in the world. To maintain the illusion of stability, the company borrowed more money to pay off existing loans. Essentially, it was a high-stakes game of financial Jenga, where one wrong move could bring the entire empire crashing down. And that wrong move was just around the corner. The bubble bursts. China's real estate market, once unstoppable, began to show signs of strain. Home prices stagnated, sales slowed, and government regulators stepped in with rules to curb excessive borrowing. Evergrande suddenly faced a dangerous reality. The easy money had dried up, with billions due in debt repayments and cash flow dwindling. Evergrande struggled to meet obligations. Suppliers went unpaid, construction projects stalled, and homeowners who had already purchased apartments feared their properties would never be completed. Panic began to spread, not just within Evergrande, but across the broader market. Investors and creditors started to realize that this time, the time bomb was real. The empire that once symbolized growth now represented instability, risk, and uncertainty. The domino effect Evergrande isn't just a company. It's a network that touches multiple layers of China's economy. Banks, suppliers, construction firms, local governments, and millions of homeowners are all linked to the company. When Evergrande faltered, the effects rippled across the entire system. Banks faced potential loan defaults. Suppliers risked bankruptcy. Local economies dependent on Evergrande's projects were thrown into uncertainty. And for ordinary homeowners, the fear was tangible: unfinished apartments, delayed projects, and financial losses that could destroy a family's future. The collapse of a single company became a potential systemic crisis. Economists around the world began warning that if Evergrande fell completely, the shock could spill over into global markets, shaking investor confidence far beyond China's borders. Government intervention and risk management recognizing the threat, Chinese authorities began to step in, balancing the need to avoid moral hazard with the urgency of stabilizing the economy. Unlike past crises, the government was wary of letting Evergrande fail entirely, knowing that a sudden collapse could trigger widespread social and financial unrest. Efforts included restructuring plans, negotiations with creditors, and attempts to complete unfinished projects for homeowners. Yet, the scale of debt was so massive that even government intervention could only mitigate not eliminate, the threat. Every day was a high-stakes balancing act between market forces and political stability. For the world, it was a lesson in how interconnected economies have become, and how a single corporate giant can pose systemic risk to an entire nation. Homeowners in limbo, perhaps the most human aspect of the Evergrande crisis, is the impact on ordinary people. Millions of Chinese families purchased apartments, paid deposits, and invested their life savings, expecting security and stability. With projects halted and construction stalled, these homeowners found themselves trapped in uncertainty. Imagine buying your dream home, handing over years of savings, and watching construction freeze midway. Imagine mortgage payments continuing while the property remains unfinished. These are the real faces of the crisis, the families and community, living the consequences of corporate and financial mismanagement. For many, the collapse of Evergrande is not just a financial story, it is a personal tragedy. The global ripple effect, China's economy is tightly connected to the rest of the world. Evergrande's debt and instability didn't stay confined within the country. International investors, hedge funds, and financial institutions had exposure to the company's bonds and projects. When Evergrande defaulted on payments, global markets reacted. Stock indices fell. Credit spreads widened. The fear of contagion spread across continents. Economists warned that a full-scale collapse could trigger a global credit crunch, similar to the 2008 financial crisis, but this time rooted in real estate instead of subprime mortgages. It became clear that Evergrande wasn't just a Chinese problem, it was a global one. Here's an additional point to extend the Evergrande script, keeping the style consistent and engaging, the shadow of contagion. Beyond the company and its homeowners, Evergrande exposed a deeper risk, contagion across China's financial system. Banks, insurance companies, and other property developers had lent money to or invested in Evergrande's projects. As the company struggled, these institutions faced losses that could weaken their balance sheets and reduce lending across the economy. Even international markets felt the ripple. Investors holding Evergrande bonds or related financial products experienced sudden losses, prompting cautious behavior worldwide. The fear wasn't just about one company failing, it was about how its collapse could trigger a chain reaction in global finance. Economists warned that the lessons from 2008 were still relevant. Interconnected debt can turn a corporate failure into a systemic crisis. Evergrande proved that in today's globalized economy, a single company's missteps can no longer be contained. One domino falls, and the effects travel far and fast, reminding the world that risk is everywhere and vigilance is the only protection. Lessons from the time bomb the Evergrande crisis teaches several key lessons about finance, risk, and global interconnection. First, rapid growth fueled by excessive debt is unsustainable. Ambition without discipline leads to catastrophe. Second, interconnected systems magnify a risk. A failure in one area can cascade across an entire economy, affecting banks, businesses, and families. Third, transparency matters. Investors, homeowners, and regulators need access to accurate information to make informed decisions. Without it, optimism can turn into widespread panic. And finally, the crisis reminds us that even giant companies are not invincible. Size and reputation do not protect against fundamental financial mismanagement. Evergrande's story is a warning. Time bombs don't care how powerful you are. They only need one spark. The road ahead as of today, Evergrande is navigating restructuring, asset sales, and negotiations with creditors. Some projects are being completed. Some investors and homeowners are receiving partial compensation. But the reality remains, the full consequences of this $300 billion debt mountain are still unfolding. The world is watching closely. Economies, investors, and governments are assessing what lessons can be learned and how similar risks can be avoided in the future. Evergrande's collapse is more than a corporate failure. It is a wake-up call for China, for global markets, and for anyone who believes that economic giants are immune to failure. Evergrande's story is a stark reminder that size, ambition, and reputation cannot substitute for responsibility, transparency, and prudent financial management. One company, one decision, one miscalculation can ripple through the lives of millions and reshape markets around the world. This has been Wealth Nexus, breaking down the financial stories that define our world. If you want to understand the hidden risks, uncover the secrets behind global market, and learn how crises like Evergrande could impact your wealth, stay with us. The world of money is a high-stakes game, and knowledge is your greatest asset. Stay informed, stay prepared, and above all, stay wealthy.